Good morning and happy Saturday. It's another great week to look at trading. So, my name is Mike Adamo, and I am a developing trader working on building my consistency in my playbook as a trader development candidate in the SMB tier system. So, I am not an employee of SMB. I'm just working on my playbooks, but I do use their format since I am part of their trader development program. So hopefully this slide deck is helpful for you. Here are the disclaimers. And the trade that we're going to talk about is an opening range break with a setup that is an overextension. The catalyst is technical, and this is on SNDK. It occurred on November 13th, 2025. And this is a playbook that I'm developing. So I haven't traded a ton of these. I'd say that the broadness of my overextension playbook is pretty thin. And so I'm excited to talk about this. And hopefully, if anyone trades these a lot, they'll give me some feedback. But here's my thoughts about SNDK. So overall, the market was in a very bullish, uptrend. We had this kind of blow off type move. We consolidated a few days, consolidated lower, sold off into the 600 zone, got bought up, went back into this range between like 630 and 611. And then on the day of this trade, we actually failed below the 611 level and went down to retest 600. So this bearish setup and this bearish price action on the day of this trade was definitely a tailwind for this trade. And we'll talk about SNDK a little bit more. In terms of the VIX, the VIX did spike up to around 20 plus over intraday. So this is a very good VIX level for things like mean reversion. We have a lot of movement in stocks. We have high fear. We have stocks that are strong kind of unwinding. And so definitely not a great breakout to the long side environment, but certainly one where it favors mean reversions. And I would say this week, which was not one of my best trading weeks, the trades that did work were mean reversion type setups. So there's no catalyst. This is a technical setup in SNDK. What I don't love about SNDK is the average volume is definitely not 177 million. That needs an update. The average volume in SNDK is like not 177 million. So I need to look that up. But that's kind of the problem for me, is that I trade much better in stocks that trade more thickly. So let's just go to FinViz and find that out real quick, because I think that's important. The average volume on SNDK is 7.8 million. So this is, let me get out of this and actually fix this. So the average volume is like 8 million. And it's obviously been going up, which is why, 23 was 2R vol, because it's probably the last few days much more than that. But I think it's important to note that this is a pretty low volume stock, so it trades with a spread. The options are spready. Nothing about this shouts like an A stock for me to trade. But I do think the setup was pretty good, and I think it was a good one to kind of study for when more liquid names do things like this. And I don't know, more liquid names do things like this all the time. SNDK has been super strong. In fact, it moved from 40 to 284.76 in 12 weeks. That's a 619% increase in the price of this stock. That's a pretty aggressive move. And you can see even in the weekly, kind of a steady trend. And then the last like 4 weeks, we've accelerated and gone more vertical. And this does show the day of the week of the trade. So we can see that we kind of put in a wick high and maybe a high on this thing for a while, but who knows? On the weekly or the daily, we have this 271.62 resistance area. And you can see it's kind of like high here. It's like the high here. It's support on this like, day high, and then it's high a day on the sell-off day. So we basically had a breakout from this 209 area. I had to look really close. We went like up almost 100 points from it. So up another 30%, right? In like 1, 2, 3, 4 days. We haven't had a red day. We had a really strong breakout bar, gap up, strong breakout bar, looking like maybe we'll set up a real, like the overextension. And then we put in this kind of inside-ish day that ends up being bullish, another gap up, and another bullish day, almost getting up to 300, 285-ish. And then we have a gap down and things start to change. So the trend was steepening. We had a high volume bar, but we didn't really see increasing volume throughout this trend. It was kind of average volume. But in general, 20 million shares versus like the 8 million that we had been doing. So, on the 60-minute, what I thought was interesting is, these last 3 days, right? We have this breakout, which kind of, continues a nice bullish day, but then we gap down, we hold the lows, try to sell and buy up and have kind of a sloppy, choppy trend up and have a flat gap and another like sloppy, choppy. And you can start to see the signs of selling in there. You can start to see signs. At the end of the day, we do overcome the sellers and buy up. And then we gap down. We hold like these 3 key levels, like this 271.62, which is this level here, which you can see is acting as resistance on the day of the big breakout. Now it's acting as support on that second day. And on that sell-off day where we gap down, it starts acting as resistance. We also have this 267.50 acting as support. Kind of acted as resistance on the breakout day. Resistance pre-market. We get above it. Now it becomes support. We also have 2-day VWAP on a 60-minute, kind of aligning with this 267.50 area. And then the other important one is this 262-ish area, which was support and supported a little bit in pre-market. So I thought that was kind of interesting that these levels are really important. And I think that, again, you can see as we get more granular, like we have a pretty like good trend, but now we're starting to get sloppy. Like the sellers are fighting for control on the 15-minute. You can kind of see that. And, we drop 2-day VWAP and then we kind of try to push into it and we fail. So, the way I look at it, this is everybody that got long here is not super stoked. They're not making money. We have this like gap down, but it buys up, but we find resistance at that 271 level. We try to pop above it pre-market, and then we flush on the open. We push back up into that same 271, which was resistance in pre-market, support the previous day, resistance, kind of resistance. And, when we come up and retest this and fail, that's when this trade is on, because that is different. Again, like everybody that bought here on this last day and everybody that was getting in pre-market, and anyone that kind of tried to dip by pre-market, they're not feeling super good when we fail here. And I think that kind of shows why we traded the way we did. When you look at the 5-minute, we stuff into that level, we flush, find buyers, we stuff, and then we fail through VWAP, and the trade is on. I do think on the daily, it's worth looking at targets for this thing too, because this is totally resulting, but this trade was not the cleanest. So I think that 250 level is just a nice round number. And then, the other target for this is like the 21, which happens to align with 240 and this kind of erasing these 3 days of gain. So 240, 250 are kind of target levels for this trade. Again, totally hindsight, but worth kind of looking for in the future. And then, when we go down to the lower time frame, I think this made me realize that I really don't see the short trades as well as I see the long trades. So when I did the negative SNDK, it became super obvious the best way to trade this. So I think I'm going to use that, and I'm also just going to try to work on flipping my mind and trying to see the long in the short, because when we look at this, like, I'm so ingrained in trading these things long. Like, when we look at this as the opposite, right? This sell off. And let me get down to like a time frame that I would actually like initiate a trade on, like a 2-minute, right? Like, when we look at this from a 2-minute, like, this is just a simple opening range break. Like, we come up here, we find, sellers or buyers if we flip it. We can't break, dip down below VWAP. See if we're going to like sell off or buy in this case, right? That doesn't work because it comes into a key level. We reclaim or stuff that key level. We find VWAP and we put in like 6-10 minutes above VWAP. And then look, a little bit of volume comes in. We put in a bullish bar and all of a sudden we're at the breakout zone. So to me, this is the zone where I want to get involved, where I want to short. It's not at the breakout zone. It's before it, but it gives you a great risk to reward. If you're below VWAP, you're wrong, and you're just a better price. I do think this is like a choppy, sloppy trend. Like, and maybe it's just because it's a short and I'm not used to trading shorts and they're ugly like this. You have a lot of like pullbacks and then it's not, in the 2-minute, it's not holding the 9, not holding the 21 or the 5, the 9 or the 21. It's just not liking them. So that's where I think the 250 target is a good one. And the 240 target is a good one. And if you were holding the 240 target and you were able to like say, well, it's still holding the 5, maybe you get out in here and you get a great price. But I think we'll talk about that. But I just thought flipping the chart is actually a super helpful way, because this just, you can see it now, but it wasn't super clear. And the interesting thing is when you get hindsight, like this price action totally changes. The character changes right here. After we stuff here, we put this red bar in, look at that. It's much cleaner. It's much tighter. It's like clear selling pressure. And then it gets choppy down below the lows because we consolidate and maybe people think they're going to buy again. But like this in here is where I should have been getting short. We'll talk about it, but I shorted a different spot. So, and it's just not knowing the trade. So let's talk about the overextension. First red day. And again, this is new. I'm kind of building this, but we need to have higher time frame. We need to see an uptrend with at least 3 to 5 consecutive green days, staircasing on higher lows. We need to be 2 to 3 ATRs above the 20-day and 10 to 20% above the 10-day. We need parabolic extension or vertical angle on the daily chart, which we saw. We need to see signs of exhaustion, increasing tail candles, fail breakout or wick rejections, volume climax blow off. And then we want to see a gap that either, flat or slightly down. We want to see a lower high pre-market structure, and we want to see overhead volume near yesterday's highs. And, if you look at this, we actually saw all of that, right? Like, let's just kind of go back here and really look at this. So, SNDK, maybe we need to go out one more, right? A little harder because it's messy, but like we make this high, we try to break again, but when we fail, what do we really have here? We have a lower high, a lower low, a lower low, a lower high, a lower low, and this second one becomes a lower high. So we've got not just like a downtrend, but a confirmed downtrend. This stuff here confirms the downtrend. And I think that's really important. And we also created this overhead resistance, right? Because this is supply. These people want out. Like, we get up to this level again and they're selling because they bought it here, they bought it here, they bought it here. They're like, oh, it's getting closer. I'll buy it. I'll sell it. So we have overhead supply that forms up from that kind of failed last leg. So just kind of interesting and definitely helped me to understand this setup better. So I did buy a put like in this entry in here somewhere where we failed VWAP. know that it's a fashionably late. It didn't extend enough for a fashionably late. And then I shorted stock in here after this stuff. But I got shaken out of my put and my stock in this consolidation. It's just as someone who likes to trade long breakouts, I struggled to see the vision of this trade. And I think part of the reason I didn't see the vision of the trade is I'm trading in this slop chop here. This is not the place for me to get short. This is the place. And, it was a decent move on the put. So I'm not saying that I didn't make money on this trade, but I could have done a lot better. So, so here's how I should have traded it. I think I should have traded it in. See, after watching the tape, I saw that this is the place to short right here. That's the size. If it gets above VWAP, you're wrong. And but this is another way. You could short 5% of loss, 267. You could add on the fashionably late, and you could add on low at daybreak. But I think you could take easily 15 to 30% of your size on this fail right here, on this breakdown. And it kind of works immediately. And I think you can take 30% off at 250, and even this flush below 250, we get to 250, but then we have a flush. So I think somewhere in here you take some off, about 30%, and then I think you're looking for 240 on and your stop can go to here now. If it gets back into the daily range, you're wrong. So your stop can go here. You take 30% off here. And then you're holding for 240. You take 30% off somewhere in here. You get, again, the same thing, kind of an extension past 240, which is interesting to see. And then I think you hold 30% to see what happens. So I need to adjust this slide. This is not, in fact, let's do it together just for fun. The best way to trade this for me, given what I know now, is none of this stuff. I just don't think it's that. I think it's 30% of a daily stop right there. It's 30% of, and there's no ads, there's no nothing. This is just, it's one and done. And then it's cover 30% an extension below 250. And then it's cover 30% on an extension below 240. And then it's all out, kind of this end of day buying. So that's I think the way I should have traded it. Let's look at the tape here just for fun. I mean, I don't think that your time to sell this is up at the highs. You could, if you're more comfortable with this trade. I do think this stuff here is interesting. I think this whole fail, you could probably put 5 or 10% of your daily stop there, and then you could add when we kind of come through VWAP. I just think that, given the see that right there, and you can see it kind of on the tape, that really aggressive down bar when we fail there, shows me that okay, the sellers really mean business. And that is essentially when the character of the tape changed, because if you look at the price action from there, and we'll just go to the part where I think for me and how I trade was the best place to get my size. And look, this is just different. None of this looks like this. We have two bearish bars. There's not a lot of wicks. It's just going. And now we're below VWAP and we're consolidating. And actually, if you look at this, we're curling too. The pressure is clear. So this could be a place right here, but I think you get one. Oh, you see that flush of selling right there? That's another sign in the tape. The time in sales just flashed all red. People are just hitting out on this thing now. They're wrong. See the curl? That is just so different than this is the wrong side of the V. This is the right side of the V. I don't know why my screen just went dark. So let's see if we can find the spot to get short. I think it's right against this level right here. See, I even put my, like that makes the most sense to me. We're curling down. There's clearly support there. This also aligns with the higher time frame. It's the low of like 2 days ago, or the opening price 2 days ago. The Qs are also melting right here. And you can see that we put this little consolidation after the tape has totally changed. And I think the break of this consolidation, risking against a hold above VWAP, is a really good spot to get short here. And there it is. That's going to be it. In fact, we should see some, I mean, it's hard to read the tape because it's still loading, but we should see some size. This tape is just terrible to read because it's just not got the volume. These bars are doing way too low volume for me to like. This is why I don't love trading this thing. It's just not spready. I mean, it's a 50-cent spread. Like, ugh. It's just not a great. I mean, I think this is a great setup, but I'm already bored reading the tape on this piece of trash. So I don't have a lot of technology on this. I think overall my risk management, this was kind of C. I didn't put enough size on it. I didn't trust it. This is new. But I think I didn't enter on the best risk to reward spots. And after reviewing this, I now see where they are. But this trade was also choppy, so clear targets are really important. So what I did well, good stock selection, the technical setup, great teamwork with my pod. I think I managed risk well. Like, it's better than like YOLOing it and like losing money. Like I made money on this trade that I'm learning. So I guess I got paid to learn, which we like. You want to get paid to learn versus losing to learn. And I'm building my playbook. So you either trade the really small or you like figure out a way to manage your risk so that you're not losing when you're learning. Those are two good things to do. So I think the price action of the breakdown was chop. It's better to trade for targets than price action exits. Like normally I use like the, hold below the 9 EMA, like that. None of that would have worked. I just would have been out. I think flipping the chart and looking at this as a breakout to find better entries is something I might use in real time going forward. I just think that this is so much easier for me to figure out how to trade these things short when I can look at them as a long, because this makes total sense for me when I flip it. And I think it's just a matter of the market that I've grown up in. I'm just more comfortable on the longs. And so why not make it something that I can see? And as I flip my brain to see the shorts, because when I try to flip my brain, I start to see it. It just takes a bit. It's harder. And then I do need a more diverse playbook for overextension. So what I can do better, I can focus on targets for price action, choppy price action. I can recognize the power of the setup and when it aligns with the market. So we have a sell-off and we have an overextension in a stock that's gone up 600%. Like, yeah, people are going to take profits, especially when it breaks key technical levels. And I think take the breakdown entry when the price action indicates it. Just that's where it is. So really interesting trade. Really enjoyed reviewing this one. Hopefully you picked something up if you take the time to watch it. If you do, let me know. Always looking to build my network of people on Discord and get better every day, every week, every hour, and every month. And I feel like this playbook helps me do that. So hopefully it helps you too.